How you doing, friends? This is Coach Ernie, and this is the 0DTE and Fat Tail Morning Market Analysis. How you doing, friends? It is Tuesday, July 8th, and my title of this story alludes to one thing, but it's actually another. And what you're hearing in the market about the tariffs is not exactly what is happening. In fact, it's exactly the opposite of what's happening. So let me explain. The Trump, I believe it was yesterday, sent out a bunch of letters and reset the timeline for specific places to August 1st. And the market interpreted that as a delay in the tariff negotiations, when in fact it is not at all. I mean, it's just palpable just how bad the media is at reporting this. So let me be very clear. The tariff clock didn't stop. It multiplied. So while traders breathe easy over a delayed Japan and South Korea deadline, Trump quietly detonated something bigger. He included in his list 14 countries with 25 to 40% tariffs, all set for August 1st. The market sees peace and the structure screams expansion. So today's calm isn't a reprieve, it's mispricing. This is where convexity lives. I mean, this is what my service is all about. Finding these types of opportunities, positioning ourselves for them, and then banking it with very, very little risk. So right now it's July 8th. The VIX is near 17. The SPX is sideways, and the headlines, well, sideways. maybe sideways, at least for the last couple of days. I guess there is this fear that we're in some sort of double top, but that's only if you look at a corrected version of the futures. If you look at the SPX, we are breaking out into new highs. We're going for it, baby. But will we? So the headlines say tariff delay. But if you look past the top line, you saw it. 14 countries hit with formal tariff letters ranging from 25 to 40%, including, yes, they are not the most well-known, but smaller countries, but also very important trading partners, including Bosnia, Bangladesh, Myanmar, Indonesia. I mean, this isn't a pause. It's a blast radius. He's actually increased it. So what's the real setup? Traders have interpreted the delay as a sign of de-escalation, but structurally, this is the classic convexity trap, a widening fragility behind a headline of calm. The tariffs are real, the fuse is lit, and the bomb goes off August 1st, just days after peak earnings with summer liquidity thinning and volatility already compressed. So what is our posture? Well, at least for the first initial part, until the market gets their head on straight, this opens up the gamma door for setups 1 to 3 DTE. So as volatility clusters and nears these high value nodes. The macro echo, which is our longer term play, those seeds should be set right now. Put them out for 30, 45 days. Deep out of the money, low debit, far dated optionality. The tactical 0DTE is fine. We're trading that. Man, I had a beautiful trade set up yesterday. And all set. Price went right into the profit tent. But I was in a marketing meeting with my team. And I came out and I turned what could have been a multi-$1,000 deficit into a multi-$1,000 profit into a multi-$100 profit. Hey, that's the way it goes. I'm probably one of the most distracted traders in this service. It's still, I produce fantastic results, and that's really the power of this type of trading. In any event, 0DTE was a big winner for all of our traders. or for most of them. Not everybody performs the same way. And in any event, it was a great day for 0DTE. I expect the same to continue throughout this week. So tactical 0DT is fine, but don't mistake premium decay for a lack of risk. Structure is starting to bend. And we're sitting here at all-time highs. It's hard to look at market structure because it is so thin, because there's no historical volume behind it in order to create good volume nodes. So you have to use what you have, and consider that as important whether you're here or deep into a retracement or historic volatility and volume. So if you're short vol, you're not just betting against fear. You're fading a widening trade war with 14 country triggers. That's not risk neutral. That's fragility. All right. So what I'm saying there is, if you're accepting the media bias on what's happening, or at least their interpretation, then you're not being a smart trader. You need to get out there, understand what is actually happening, read the source. Don't listen to the media. The media are liars, 100%. They have absolutely no clue on what is happening in the real world. And so if you're watching the media, then you're a fool. Look at the numbers yourself. Look at what is actually reported. Do your own interpretation. Use our AI to actually read it as is. Turn up its reflection meter so that it actually goes through and does a 100% check on every piece of data that's coming through. And then you'll get the real story. Then you can set yourself up and position yourself correctly for what is about to happen. Now, I'm not saying that this will be a big, it will be a big surprise once people start reading into it and understanding. I'm not saying that August 1st, when it comes along, all of a sudden everyone's going to be, oh, I never saw this coming, because it was right there in his, truth, what do they call that, a truth tweet, and in the letters. What I'm saying is that the market is going to behave the way the market behaves. The effect is probably going to be way more than what it's anticipating, which is actually normal, because the market generally underprices the actual move based on the expected move by about 20%. And that's where our advantage lies, that 20% that the market underprices. And, anyways, that's where convexity lies. You know, it's kind of interesting. I showed my service, all of my students, what is actually happening out in the options chain. You look at it and you realize, you look at the open interest, and you can see open interest in near-dated options or near-priced options is relatively high. And then as you go further out, it starts diminishing. But then if you keep on going out, you start realizing something really weird. All of a sudden, you'll be going from open interest of a few hundred and maybe 1,000 here or there. And then all of a sudden, you'll see like 10,000 shares at some obscure level way out of the money. And then 20,000 and then 60,000. And you're wondering, what the hell's going on? Who the hell is trading 60,000 shares 300 points out of the money? I'll tell you who. The pros. The pros are buying those cheap options way out of the money because they know. It's not that they're anticipating that price is going to go there. That's not what they're doing. They are positioning themselves for what they know is an eventuality. It may not hit that on that particular option. It will hit on the next one or the next one. They don't have to be right very often, but their insurance and their pricing is so cheap that they can afford to be out there and buying these things for 5 or 10 cents a share. Because when it pays off, it's going to pay off in billions of dollars for them. So that's exactly what we're doing. We are playing those outsized moves that the market underprices regularly. I have a great chart that I think I've shown before, but it shows where the expected move is and then how often the market exceeds the expected move. And it is 20% of the time. Think about that. While everybody else is out there doing their back tests and everything and saying this is where we should be right on the expected move line, and they're not making money, right? Because they're overpricing their entry into these trades because that's where the market is expecting it to be. So it's pricing it according to expectations. All the things that we're pricing in or positioning for are completely underpriced. Completely. And so that's where we live. And so our drawdowns are virtually nothing, right? Just go sideways, slight little bleed. And then when we hit those big ones. We're getting all of those big trades that you're missing. You get it? So while you're saying, man, I wish I was positioned for that, or I wish I knew how to have predicted that, that's probably what you would say. And that's where your fault is, in thinking that you need to predict these things. Prediction is impossible. Position is very possible. Understanding convexity and how the market actually works over time, that is your edge. Trying to listen to the media and positioning for what the market is pricing in at that time, that is not an edge. The market is not going to price it to give you an edge. In fact, it's the exact opposite. It's the anti-edge. It's fragile. You want to be anti-fragile, the opposite of what the market is trying to give you. All right? All right, enough for the rant. Anyways, that's what we're doing. Like yesterday's trade. I was positioned to make thousands of dollars. What do you think I paid for those options to make $1,000, $2,000? I paid only $50, $60. Think about that. I paid $60, and had I not been in my marketing meeting, I could have banked about $2,000. That is the power of positioning and knowing that the market routinely underprices its expectations. So we sit out there, we wait for them, we pay virtually nothing, and we collect bank. If you want to learn how to trade that way, go down below. The link is right there in the description, school.com/fattail. All right. So let us go to the charts. Is it going to go there? Oh, yes. I hit the chart. But what I really wanted was the VIX. So we'll do our everyday 0DTE analysis right now. You can see that the VIX now is below 17. We're in zombie land. Ah! We're still 20 to 30 wide. I have not checked the big ass fly. I expect that that's super high. Why don't we just do that just to see? What I mean by super high is that it's a very bad risk. The debit is going to be extremely expensive based on where the VIX is. But we'll see. Maybe this tariff news has picked up the market this morning. I don't know. Let's check it out though. What I'll do, just give me a second here. I'll set it up. Oh, I have to log in. Damn. All right, we're not going to check it because I can't fart around with that. Should have done it earlier. Anyways, I believe that we're our big ass fly is not on the table this morning. I can virtually guarantee that. We're 30 wide. Let's take a look at the market directional bias. We are definitely in a bullish bias. That moving average is pointing almost straight up. We had a little bit of a pullback yesterday, and this morning already the market is starting to move up. So you can see here's the pullback. The market closed right there. So we're well above our market close. So market closed around 62.60, and we're currently sitting at around 62.82. So we're 20 plus points above where the market closed last night. And so here's our volume profile, although it's very young. immature because we're at near all-time highs. But that's okay. It's still important. There's a good strong structural level here at right on this node here. It's 62.77 on the ES, and then again up here at 62.90. All right. So what we're looking for are pullbacks to those levels or any of these levels here, and then take a long call fly above. So I think, there's a good possibility that once people see what the hell's going on, that, we can get a good downturn. But in the meantime, the market is under this impression that everything's hunky-dory, that the pressure has been put off. But no, like I said, pressure hasn't been put off. It's just been shifted and widened. All right, so let's take a look at the bigger picture. See, up here is all-time highs, very low volume, small, tiny little features up here with which to key off of, but that's all we have. So now, if you were smart, in the next coming days or weeks, you start placing your trades down here for that August news. Or, we already know it in advance. I'm just saying, when August comes around, all of a sudden the media is going to be like, oh my God, how could this possibly have happened? We thought that there was a reprieve. So that's where I think that's where your August trades should be focused on in this area, positioning. All right. Now, the other thing is taking a look at bonds, man. There's been a material break in bonds. Let's see here. What is going on here? All right. So this is the linear regression channel for all the different bonds. See, I don't know why it's not showing anything. I'm just resetting it now so you can see where the channel is. And the reason why I want to show you the channel is if you look at the 5-year, the 10-year, and the 30-year, we can see a big break in every single one of them in that channel. So right here. So bonds are breaking down. Now, what happens when bonds break down? That means interest rates are going up. Now, this could be a temporary reprieve. We had the same kind of thing happen back here in June, right? And then we continued on that path, but we'll see. That's a concerning thing, right? So we got to watch that. Oil, on the other hand, is moving down again. It's still down. Gas prices are going to be great for this summer, for summer traveling. And other than that, everything all looks good. All right, so we have our, let's see, what else can we look at? Let's take a look at yes. Let's see if we can bring this up here. Preview. There we go. So these are the trades that we're looking for today. Gamma Door. Those are gamma related trades. Those are going to be strong at least for the next couple of days. We'll see what happens on tomorrow when the real news comes out. But the 1 to 3 DTE are going to be particularly, they're our favorite trades right now. And then our second is putting it way out for those 30 to 90 day trades when August 1st rolls around, and what the fallout with that will be. Tactical 0 DTE, still a good trade. Looking at 35 wide, less than 10% of the width of that fly for the debit. And in both directions. Actually, yesterday I did a 0 DTE fly, and I went down to about around 2% of the debit, something like that, for like a 1 to 50 or 1 to 70 risk to reward, and I still made money, and I could have made a lot more. Yep, and then the rest. All right, so that's what we're looking. We're looking super short term and long term. Midterm is seems to be off the table for now. All right, let's go back to the big head. There are your plays for the day and for the rest of the week. We'll see you tomorrow. Thank you very much for showing up. Coach Ernie is out.